It's about that time of day again here. Welcome to your nightly newsletter, boys and girls. My name is Joseph James. It's Tuesday evening, February 24th, 2015. In tonight's newsletter, crude oil is range-bound with a bearish tone. So we're going to focus on selling at resistance levels tomorrow. But, hold on. There are a ton of bear traps on our price action and anchor charts. Stay tuned for more about that on crude. Gold. We got gold. Boy, that whole strategy of buying and selling and using 1,200 an ounce worked out flawlessly today. Here we are this evening. Gold is stuck inside of a triangle formation right about $1,200 per ounce. And our plan to use this big round number as our target will continue for tomorrow. Still looking to sell the highs on gold. And how about that Russell? Yeah, the mighty mini Russell is bullish. Nailed that target. Volume confirmed yesterday. It's going to do it again today. Russell is bullish in a clear bull channel. And volume definitely confirmed today's new high. So we're focused on buying at support levels on the Russell as we go towards our targets for tomorrow higher. Very nice move on the Russell this week so far. As you can see, we have a stupendous newsletter for you guys and gals this evening. But before we begin, I want to remind you guys to make sure you're watching this video over on our trading blog. Make sure you're watching it over here at sidewaysmarkets.com. There are 3 reasons why you should be watching this video on our trading blog right now. And if you're watching it on our YouTube page, there's a link right below the video in the description that will take you over to this blog page. 3 reasons. 1, you can download all of my charts that I'm using tonight in the video. You can download those charts on your computer and have it ready for tomorrow. 2, I got a free pass for you. If you're not a member yet of School of Trade and you're wondering what it feels like to be a member in our trade room, maybe you're curious what all the commotion's about, maybe you're wondering what the longest running, most successful trading community on the web feels like to be a member, well, I'd love to give you, if you're interested, I'd like to give you a free pass to come out and attend our trade room. And what would we say? 1, 2, 3 things here. Luckily, I'm not a math teacher. 3rd thing here this evening is the nightly newsletter mailing list. All I need is your name and your email address, and I'll send you an email every evening when this newsletter goes live. So 3 things here, guys. Download the charts. Grab your free pass if you're not a member at School of Trade yet. And, of course, register for our newsletter list. Guys, if you register for the newsletter list or you grab your free pass, just be aware I'm going to send you a verification email to make sure you're not a robot. Alrighty? So double check that spam, the junk folder, any other folders you got there. Make sure you get that verification email. Let's rock and roll. Let's rock and roll here. Starting out with that yellow metal they call gold futures. Now, again, we talked about this last night. Gold is bearish. We know we're bearish in the long term, but we continue to use this 1,200, right, as our price magnet. So saw this today. We saw the price go up. We had some levels overhead here earlier. This chart's been updated, right? Sell it back down. It goes down. Buy it back up. It goes up. We're going to sell it back down. Now, like I said last night, there were some buying opportunities down here, right, which we talked about last night. But if you remember last night, I said I personally am going to stick to the sell side here on gold right now. So we got a bunch of different sell zones waiting for you guys on the yellow metal. So gold is bearish, kind of stuck around this 1,200. So we keep seeing lower lows, lower highs, right? We do. It's consolidating, but we are definitely still bearish. There's no way to call this bullish right now. So keep patient and keep selling at resistance levels for the best trading opportunities and keep using that 1,200 as your target. If we happen to disconnect from that 1,200, you've got easy targets below you at 91.5, 85.2, and 1178.2. Honestly, though, guys, I don't think it's going to happen tomorrow. We got Yellen back in the microphone for one more day. She's not going to say anything new tomorrow, but you know there's going to be a little bit of analysis paralysis, a little bit of hesitation, especially with gold. Remember, the dollar will be what's most affected by what she says tomorrow. We saw a nice spike on the E-minis today, got our target filled in the Russell. But, the reality is the dollar will be the first. Gold will follow, euro will follow. The last thing would be crude oil. So it's going to be gold, e-minis, currencies that'll be widely affected by this stuff tomorrow. And again, tomorrow will be a much milder day. She's not going to say anything new tomorrow, so just be aware of that. So again, as the price goes up, wait for it to fail. If you're a member of mine, you know exactly what we're looking for to see it fail. If you're not a member of mine and you'd like to get more information about what I mean when I say wait for the buyers to fail at these highs, come out and see me tomorrow in the trade room and I'll walk you right through it. Here's my price action chart. And we got this exact same thing last night on crude oil. And we used this exact same technique last night. So, hey, might as well try it again here on the gold. Different market, but same type of scenario. As you can see, we've got two bear channels here, right? I'm sorry, two channels. We got one bear channel, and we've got one bull channel, right? Kind of look how that goes. And right here, again, this should bring back some memories because last night we did the exact same thing on crude oil, and it worked out flawlessly, right? Up around that, was it 50-30, 50-20 from last night? So we know we're up around resistance right now. Got a nice big fat green candle. All you need is a nice big fat red candle here to sell those highs. And then you got your Yellen target down at 1200 as you guys push back off these highs. So nothing new here on gold. A lot of the same stuff here on gold. We've got resistance. We've got resistance. We get a nice fat juicy range expansion resistance up there at 1213.1. So I will be licking my chops if I can sell that level up there at 1213.1. I doubt we get there unless something crazy happens out there in this world of ours, which wouldn't surprise me, but it's highly unlikely. We're more likely to go up, come back down, go down, come back up, or up, back down. Again, I told you my story. With that strong US dollar, with the weak gold, I am personally going to stay to the downside here. But you will have buying opportunities here if we do collapse off these highs, right? So it's easy to see. We go up, we come down, take a portion off here, ride it down to those lows, or wait for it to go to the lows, buy it up to the 1200, down, right? I'll stay to the short side. And if we happen to disconnect here, again, you've got targets down to the downside here at support. If we happen to go crazy here tomorrow. Again, I don't expect it, but right now you are looking for sells at resistance. And as I'm recording this right now, almost 7 o'clock Eastern time, we definitely know this is hitting resistance right now. So it looks good here to be looking for that sell. Remember to get the trigger. It's okay to anticipate, but get proof. Right? It's okay to anticipate, just get proof before you go pushing any buttons. Let's move here from the yellow metal here to the mighty mini Russell. And we can see, again, pretty much textbook from yesterday. We had volume confirming yesterday, and our exact words yesterday evening was wait for it to pull back and buy it. It was right here. So pull back, buy it, pull back, buy it. If you took my advice, though, you are sitting pretty here right now at that. It was a little bit lower support, I believe, and then I had a level right there. So you've bought at support. Hopefully you took my advice on that because it looks like this is going to continue. The only thing that I'm concerned about is this overshoot. We got this overshoot of the channel here, which means we may dance around this level again before we go higher here. So just be aware of that. Again, if you bought it earlier today, you're already in. Good job. You got your profit targets waiting for you overhead. If you didn't get a chance to buy it today, you've got definite volume confirmation right now. If you tie up the highs here, you'll see definite volume confirmation, but that overshoot, that overshoot tells me we may end up somewhere down in this 27.2 to 25 even. So again, if you bought it today already, wonderful. Take some profit off at 34.4 and hold on to your measured move target. But if you didn't buy it today, you really got to wait for price to come back. And it may come back just a little bit before it goes, but my gut tells me, that overshoot tells me they went a little bit hoo-hoo on the Kool-Aid, right? They got a little bit crazy on the Kool-Aid. So it'll probably overcorrect here before making the next move here tomorrow. Difficult to tell exactly what's going to happen because of our gal Janet yelling on the microphone. It will be a little bit lower volume. But again, overshoot tells me I wouldn't be surprised if it pulls back to be a buy. That's where you want to wait for it to be a buyer if you didn't buy it already today. And of course, the volume confirming just basically tells us you just keep buying those support levels as we keep going higher. All right, just keep buying those support levels. And don't forget, if you want guidance on this in real time tomorrow, just come out and join the trade room, and I'd be happy to give you guidance on this in real time. You do not need to do this on your own. And we get some great targets overhead. You know, like I said last night, we got this range expansion target up top here, so we're on the move up to that 1240 area for that measured move, and at 1248 here, possibly next week. Looking good to be a bull right now in the E-minis, that's for sure. Moving over to the price action chart, here's a really good example of why you're bullish right now. Here's a really good example of why you got to be a bull right now. Russell price action, very clear we're bullish. It's easy to see. We got a bull channel. But really what I love about this is the midline. The midline really tells a good story. You can see the midline is well respected, and every time we get below that midline, it just gets smacked right back higher. So what's worked in the past is likely to work in the future. So we'll continue to use that as strength. But what I really see is the biggest value here has to do with this small channel right inside of this. Now, if you're a member of mine, you know exactly what I'm talking about. The fact of the matter is that we broke that channel, which means the sellers should have been all over this, and they couldn't get it done. We look at the moving average. Yeah, exactly. What moving average, right? I mean, just torched right through it like a hot knife through butter. So we know that there is a short-term bull move. We know the long-term is, but we're day traders, so it's nice to see some good personality, a little perkiness to the buy side here. What I really like, though, is the fact that these sellers that came down, they just couldn't get the job done. So in that nature, with that clue, I hate the word guarantee, but it's almost a guarantee we go to that 1235.6 overhead. I don't like the word guarantee. There's no guarantees in anything in this life. But again, the way it looks right now, though, maybe it pulls back a little bit before it goes. But again, we are most likely, our destiny here on this Russell's to be up at that 1235.6. And then if you kind of look at it in a little bit different light, A, B, C, D, there's the big measured move at 45. That will probably take a few days to get there just because it's going to have to go through the highs of that channel. But I'll tell you, though, I could easily see tomorrow getting up as high as that 1240 area with that measured move target. That's the same measured move target that we saw on the anchor chart, right? This is a very different chart. So everything really lining up nicely here on the Russell. Again, difficult for me to tell you not to be a buyer right now. All I got to say, though, is just be careful buying right now. If you took my advice last night and bought at the support levels as it pulled back, then you're in a great spot. You're already in long right now, right down here. If you didn't buy it, you really need to wait here to be a buyer at another level of support. So maybe you buy the moving average, maybe you buy the midline. Difficult to tell exactly where you'll get that buying opportunity, but just remember, we're bullish. Keep on buying at support levels as we go higher. And then, well, I better catch my breath for this chart. I might need an Advil for this chart, or make it a glass of wine or a shot of whiskey for this chart. There's a lot on this chart, as you can tell. And we talked about this yesterday. Moving to crude now. On the black gold, on the Texas T, crude oil is range bound, definitely bearish. We know that for a fact. But this chart has a ton of clues for tomorrow. Okay, and you're going to see the next chart I'm going to show you. It's going to give you whiplash. There's so much going on in this chart right now. I really had to be selective as far as what I even wanted to talk about tonight because a lot of it was worthless. But let's do my best here to kind of walk you through kind of what we're seeing. First of all, the big, most important thing we see on this chart right now, and it's the same exact thing from last night, it's the trading range. The trading range is public enemy number one right now. Well, maybe not public enemy number one, but it's our priority right now is to trade this range. I'm going to stick to the downside, so I'm going to focus on selling at resistance levels. But I want you to be careful right now, and here's why. We know that we're bearish, and so we want to sell at resistance. So what I'm going to look to do is I'm going to look as price goes higher to be a seller, to be a seller, to be a seller, right? Make sense? Relatively easy there. If we go up to the highs, to be a seller. It worked great today. Remember this from last night? I gave you guys that short. It was a little bit premature off the high, right? A little bit early before that high, but you had a great sell zone here to work with last night, and you can see how well it worked today. So easy money there on crude selling those highs. Now, though, as we start going lower, okay, so we all know the plan for tomorrow, right? Plan is sell the highs, sell the highs, sell the highs, sell the range highs, sell the resistance, right? Nothing's changed. But I want to make you very much aware of some very big problems as we go lower. You'll notice we run right into the low of the range, and then look closely. We got a couple measured moves here. And the next chart I show you is going to really do a much better job at this, I think. We have first the A to B long term, right? There's our long term measured move. So that takes us down to this 47.10. What I want to be worried about tomorrow is this measured move, right? Take that level, project it lower. And the reason why I mention this is because it's right at the low of this range. Okay, it's right at the low of the range. It's just outside the low. Remember, you're going to see a lot of people that are going to be really excited about selling below the low of that range. So I'm calling it a breakout trap right here because that's likely what's going to happen. Now, keep going with this. So we have the measured move, what we'll call measured move support, and then look what else we have. Draw the trend line off the highs, project it off those lows, and look what else we have down here. We have the low of a channel. Basically right now, there's a big neon sign that's just blinking saying trap, 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 and that's what's likely going to happen. Tomorrow, we're likely to go down to these lows, get the sellers in, trap them in, stop out the sellers, go back up. Here's what I think is going to happen tomorrow, if I had to guess. We go lower just enough to get those sellers expecting to get it to go lower, right? So they'll take it with a breakout retracement. They'll try to sell the low. You know they will. And they'll get run over by profit taking at that low. It's almost a guarantee. You know what I mean? Like I said, I don't like to use the word guarantee, but we see this over and over and over again, right? I mean, look what happened up here. Some poor sucker bought that high right there. Poor soul, right? You got your head taken off of that one. So we already know, remember, as professionals, we know not to sell that low. So we already know we're not going to sell the 48.70, but what I'm trying to tell you not to get trapped with tomorrow is that break below 70 and then the retrace, okay? So what I'm going to actually look for is the break down, the trap to the downside, and then what's going to happen is you're going to get buyers coming in, most likely, and they'll get trapped. So it's probably going to be a double stop run tomorrow morning if my gut instincts are correct. So possibly we just make a run for it, but I highly, highly doubt that. So right now, let's play the game of what if we go higher, what if we go lower, okay, et cetera, what if we go sideways. If we go higher here, we've got this kind of short-term range here. As we go higher, sell. As we go higher, sell. As we go higher, sell, right? You got that. That's easy. And then targets are going to be down at these lows, okay? Again, relatively easy to see that. What if price goes sideways? If price goes sideways right here, right on top of 49, like it did on top of 50 this morning, if it goes sideways, do the exact same thing we did today in the trade room. Mark up the range, buy the lows, sell the highs. The highest percentage trades will be selling the highs of that short-term range. Now, the trap comes in when we go lower. When we try to go lower, this is where all those sellers who just can't wait to push this thing down to 47 because we got all those targets waiting for us, make sure they don't get in too early because you know it's probably going to bounce off that measured move, off the low of that channel, and of course, it'll probably rocket back up. So if you're, if you like a little bit of danger, if you like some wooden roller coasters, hot air balloons, looking over the edge of the Sears Tower, if you like that type of stuff, you could buy this low. But just take your profit quickly, and I would imagine that target will be right back up here around that 49.58 if we haven't violated it overnight. Okay, so if we haven't gone up and violated that 49.58 overnight, okay, but if we have, just ignore it and use the $50 a barrel for your target. So look for a bear trap. You can buy it. Lower percentage being a buyer right now because of the long-term trend. And what I see happening is a bear trap back in, a bull trap back down. That would make perfect sense for what we typically see out of the market, this crazy market they call crude oil. Okay, now I want to show you another chart here because this chart, sorry about that, wrong workspace. There we go. I think this chart really does a pretty good job at simplifying it. The last chart I showed you had quite a bit on the chart. I think this one does a better job at kind of simplifying it for you. This is one of the reasons why we love price action charts. It's just a tick chart, but it really helps me to understand the value of the candlesticks. I can shave off the wicks. I can give a little more importance to certain things based on the way the candlesticks look. So crude oil price action, definitely range bound. Nothing's new there. Again, we know this already. We know the trend is down, but there are a lot of possible traps on this chart. So here's what I want to look at. Right here. If price goes higher, as you look at this a little bit closer, on the last chart, we didn't get this stuff. On this chart, though, we get this very obvious little triangle here right at 50. So as we go higher, you can almost guarantee you're probably going to get a bear trap here. And it's probably going to go back to 50 before making the move lower. So as we go higher, I'm personally going to stay a little bit careful around that 49.62. It'll probably happen overnight. You can look for it, but again, don't be surprised if we try to go lower and that magnet, right? Just when I think I'm out, they pull me back in. It's probably going to pull us right back up to that $50 a barrel. And what gives it away is this consolidation right here. That's really what gives it away. If you had volume on this chart, you'd probably see all the volume piled up there at 50. So as the price goes higher, bear trap. Again, you could buy that. It's aggressive. I'm just telling you, though, be careful selling that 49.62. And do not trade that 50 unless, of course, you don't like money in your account. What I would wait is I'd wait for price to go up, fake break those highs, and then sell this sucker back down. Okay, if we keep going, right, so we go up, bear trap, up to the 50, wiggle around a little bit, the buyers will try, sell the highs. If we don't get the reversal at the highs for the trap, up to the 5109, sell the 5109. That's the tasty area for tomorrow, guys. That is the dream come true scenario for tomorrow. I'd love to get us up around 51 and then sell it back to 50 because there's a chance that it may just whoop, 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 whoop all the way back down, right? So you know what I always say, when you're bearish, focus on selling. And the higher you can sell, the better your entry is going to be on it. So, and of course, I don't think we're going to get there tomorrow, but this is crude we're talking about. 49 to 52? Yeah, a little $3 move. I can see that. So we could possibly just jump up here. I don't think it's going to happen here. So as we go higher here, bear trap up to the magnet. If we go through it, sell. Go through it, sell. Go through it, sell it again. All right, that's the plan here for crude tomorrow. What if we go lower? Again, if we go lower, here's where you got that trouble, right? This is where you got that trouble. And again, in the last chart, we projected out this channel low. Still is there. Again, be careful. Be careful. You know there's going to be some sharks in the water down here. So again, a wise trader will look for the fake break back in and then take the next leg down, right? Take the next attempt to go down because you know there's going to be some folks that get all chopped up at those lows because you got the measured move support right there at 48.45. So best option is to sell the range highs or wait for the sellers to fail at the lows and then take the breakout retrace on the second attempt back below that 48.45 down to that 47.06. As you can tell, this market right here is built to lose money for you tomorrow. It's very, very clear. And this is what happens when you leave those crude traders, those crafty crude traders alone without any real volume for 24 hours, right? All of a sudden you start getting all this stuff built into this market. So I'm very pleased with our analysis. I think we got everything under control for tomorrow. All we have to worry about is between our own ears tomorrow morning. Stay patient. Stay patient. Don't force it tomorrow. And remember, if you don't know what you're doing, stop pushing the buttons. Get educated, right? Get the education you need. Get the knowledge you need so you can understand the language of the price action. Guys, my name is Joseph James. I want to thank you so much for coming in and seeing us here tonight. You got our plan. Bearish on crude, bearish on gold, bullish on Russell. Nothing's really changed from last night. A lot of the same type of stuff here. I want to remind you guys to download today's charts, grab your free pass, register for the nightly newsletter mailing list, and you know me, if you happen to stumble over here to SchoolOfTrade.com, and of course, happen to stumble over here, we got 3 levels of membership, beginner, intermediate, and advanced. I have been teaching traders for over a decade. It's 11, it'll be 12 years this Christmas, teaching and trading with our students here at School of Trade. We are the fastest growing, most successful, longest running trading website and community of traders on the web. And I would love to show you why, right? You might be wondering, what is all the talk about? Take the free trial. You'll see for yourself. If you're a brand new trader or if you're an experienced trader that's still struggling to find consistencies, I'd love to teach you the language of the markets, and I'll show it to you in our free trial. Don't forget, we got someone standing by here 24/7, 365 to give you guys some help online if you need any clarification or anything we're talking about in the trial. All righty? Guys and gals, thank you so much for being here. Now get out of here. Go spend some time with your family and friends. Rest up, refocus, be well. Be nice to each other, and I'll see you guys tomorrow. Shall we do it again? Same time? Same place? All righty. We'll see you guys tomorrow. Adios, amigos. Bye-bye for now.